This is Matthew Cratter from Trader University, and today I want to talk about how the CEO of Bitcoin is needing to increase prices because of inflation. Obviously, this is just a meme. Bitcoin does not have a CEO. It does not have a headquarters. It doesn't have a legal counsel. It's this completely decentralized protocol. But I think it's interesting to think about it in these terms, that Bitcoin is able to make these adjustments to inflation even without having a CEO. A year ago, Bitcoin was at 11,400 approximately. Today, it's at close to 55,000. Now, it's important to look at this in the context of government officials, what they've said about inflation. We have Janet Yellen, of course, who did such a terrible job as chairman of the Federal Reserve that they decided to make her Secretary of the Treasury. And we can tell her economic background and her economic prowess by just looking at a few headlines here. This is from March of this year. Yellen says U.S. inflation risk remains small and manageable. Just a couple months later in May, Yellen expects high inflation rates to be temporary. And then a couple months after that, actually on June 5th of this year, Yellen says inflation could reach 3% this year as recovery continues. And now where is inflation? It's at 5.4%. She was off by almost 100%. We just got the latest CPI number this morning, and it is 5.4% on an annualized basis. This is the highest inflation rate, highest CPI since really 2008. And as we've talked about in many other videos, the CPI is really a fake government statistic. It's been highly massaged to keep inflation, at least the official indications of inflation, to keep them as low as possible. So the real rate of inflation is actually much, much higher than this, presumably. And we can see that if we even use CPI numbers. Rental cars up 43%, gas up 42%. These are annualized number. Hotels up 18%, beef up 18%, chicken and apples up 8%. So I'll link to this. You can go through the numbers and look at them. But what's not really incorporated in the CPI is something called shrinkflation, where prices don't go up, but then you end up having smaller package sizes, for example. So here's an example of a package of oatmeal that used to be 10 packets is now cut to 8. Tuna cans cut from 7 ounces to 5 ounces, and family cereals shrinking from 19.3 ounces to 18.8 ounces. Keeping the prices the same, but just shrinking the amount that you get. If you look at a tube of toothpaste, they're much smaller than they used to be many years ago. Great article here in the New York Times that talks about shadow inflation and the different problems with inflation measurement. And one of the great examples this author gives, and I'll link to it below, is that rental car companies, for example, have just been raising their prices to deal with inflation. But he has numerous examples talking about how hotels, rather than raising their prices, obviously post-pandemic, there's people are a little bit still reluctant to travel, and the hotel industry has had a bad 12 to 18 months. And so what the hotels are doing, according to Mr. Cole, who's cited in this article, is they are cutting down their service quality. So their breakfast buffet is much smaller, and they're not cleaning the rooms as well, and the bathrooms are dirtier, etc. So this is another way to deal with inflation. You don't have to raise prices, but you can just cut your costs by skimping on breakfast buffets and cleaning. Meanwhile, if we look at commodity prices and how they've changed over the last year, crude oil up over 100%, gasoline up almost 100%, sugar up 45%, a lot of metals up 40% or more, corn, wheat, soybeans all up double digits. And then I think it's sad and enlightening to see at the bottom here, there are a lot of gold and silver bugs who've been giving me a hard time over the last 18 months. They really have a lot of justifying to do. Gold down 9%, silver down 11%. In this environment of huge central bank money debasement, fiat money debasement, money printing, low interest rates, and increasingly high inflation, gold has not been doing well. By contrast, as we said, Bitcoin up almost 400% year over year, gold down about 10%. I talk about the death of gold in this video from March of 2021, and I'll link to that in the description notes below. Meanwhile, people like Peter Schiff will just never learn. Gold always around 1700, even as Bitcoin goes from 1 to 10,000 to $1 million per Bitcoin in the coming years. This is obviously a fake account, but Jerome Powell, central bank chairman, saying, don't worry about inflation numbers, I'll always print the difference. There's a lot of truth to this, actually, and it's really the Fed policy that's behind these very high inflation rates. If we look at the U.S. Budget, bringing in currently about 3.8, so call it $4 trillion, spending about $7 trillion. There's the budget deficit, which needs to be made up for by borrowing the difference and issuing more government debt. Unfortunately, a lot of other countries and central banks no longer want to buy as many treasuries on the margin. And as a result, the Fed becomes the buyer of last result. This is their balance sheet and how much it's grown over the past year or so. We can see it just going vertical during the pandemic and then continuing to inch up. And this is because the Treasury continues to buy, I believe it's $80 billion worth of, the Fed continues to buy about $80 billion worth of treasuries every month and $40 billion worth of mortgage-backed securities. So this is all the treasuries that are held by the central bank. So you have basically one part of the government borrowing the money and overspending, and then you have another part of the government, the central bank, whether you can debate whether it's private or not. The point is that they're printing up new money and buying these treasury securities to finance government overspending. And this is one reason I continue to be bullish on Bitcoin. I continue to be bullish on real estate and stocks, simply because the government cannot stop spending. We have all these obligations that are coming due as the baby boomers retire. We have these huge Medicare payments, Social Security, and this will need to be paid out. But it will be paid out with devalued dollars. Government cannot stop spending. The Fed cannot stop printing, and so asset prices, consumer prices, CPI inflation will continue to keep going up. And the same is true with Bitcoin. The nice thing about Bitcoin is this completely independent and decentralized protocol. It adjusts to market conditions and it adjusts to the demand for it as an inflation hedge. And as such, even though Bitcoin does not have a CEO, it will continue to go up as the government continues, as the central banks of the world continue to debase their currencies. I'm still looking for Bitcoin to hit $200,000 per Bitcoin by the end of this year, and in coming years to easily go into the millions of dollars per Bitcoin. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.